Wall Street dips on Ukraine concerns despite strong data. U.S. stocks fell on Thursday after Ukraine's president said Russian forces had been brought into his country, bringing concerns over the volatile region back into focus and overshadowing some positive economic data. Worries over tension abroad had largely faded from Wall Street, with major indices seeing few negative days over the past 2 weeks, and both the Dow and the S&P hitting records. Ukraine's Security and Defense Council said the border town of Novoazovsk and other parts of Ukraine's southeast had fallen under the control of Russian forces who, together with rebels, were staging a counteroffensive. While few U.S. companies have heavy exposure to either country, investors are worried about the potential fallout from any escalation in tensions, including increased sanctions. Quote, "The longer this situation goes on, the bigger the concern it will become for the market, as it is unclear how it gets resolved," said Doug Coate, chief market strategist at Voya Investment Management in New York. An index of major shares in Europe, which has more exposure to the region, fell 0.6%. If European growth is depressed by the conflict, that could have an indirect impact on the United States. Russian dollar-dominated RTS index. RTS slumped 3.6%, while the market vector Russia Exchange Traded Fund fell 2.9% to $24.37. The Dow Jones Industrial Average fell 71.92 points, or 0.42%, to 17,050.09. The S&P 500 lost 5.87 points, or 0.29%, to 1,994.25. And the Nasdaq Composite dropped 13.58 points, or 0.3%, to 4,556.05. The day's decline in the S&P is biggest since August 7th. The index has risen for 11 for the past 14 sessions and has closed above 2,000 for the past 2 days. However, recent daily moves have been slight and trading volume has been among the lightest of the year. A trio of economic reports pointed to improving conditions. The U.S. economy rebounded more strongly than initially thought in the second quarter, with gross domestic product growing by 4.2%. Separately, jobless claims fell for a second straight week, the latest sign of improving labor market condition, and July pending home sales rose far more than had been expected. Quote, "This data is so good and so strong that it raises a concern that the Federal Reserve will have to come in earlier when it comes to raising rates," said Coate, who helps oversee $215 billion. The Federal Bureau of Investigation said it was investigating media reports that several U.S. financial firms have been victims of recent cyber attacks. J.P. Morgan Chase and Company said it was investigating a possible attack. Shares fell 0.6% to $59.18. Abercrombie & Fitch Company sank after the retail second quarter same-store sales fell more than expected. Williams-Sonoma Incorporated tumbled 10.5% to $67 a day after it reported its second quarter results and giving an outlook. Retail sales reporting losses and continually falling is the indication that the economy is not recovering. For those not paying attention and not understanding, one is fluff. The actual numbers speak for themselves. Retail sales is the everyday man index of how the economy is doing. If retail is doing bad, that means the common man is not doing well and does not have money to spend on things other than necessities. Tell me what you think. Thank you for watching the Shikama Live Show.